All right, Larry Tentarelli. Great
Dale,
to
good
have you
morning.
back. Thank you so much, Larry, for stepping up. You're, friend of the community when I could reach out to you last minute and you're willing to make some time in your day to come and talk to us. Really appreciate it.
Dale, anytime. Thank you for having me. I'm always glad to be here.
Okay, well, Larry, last time we talked, I know you were bearish. We had that big bounce here, and if you want to share your screen, I'm very interested in what you're thinking here, and what you're short, and perhaps you have found some sectors that you still want to be long. But let's start with S&Ps.
Gotcha. Okay, see, you can see my chart, right?
Yeah, the big question was when it came off the 200-day. Is it a consolidation of the recent rally and a correction of that, or the resumption of the bear market? Where
Right.
did it come down?
Right. So here's where we're at. We're at a pretty key level. So 4,000 is really my line in the sand on the S&P. So 4,000 is about a 50% retracement. Sharp move from 36 to 4,300. It looked like, I've got to tell you, it looked like on Thursday, the markets had gotten to be pretty oversold based on the McClellan oscillators. And it looked like that close after Thursday, it looked like there could be some room to the upside, maybe to fill that gap. And then obviously
before Moses came down from the mountain.
Yeah, they put the hammer down pretty fast. So this was a very sharp. I really think that from 4,200, if it could have cleared 4,200, based on what Powell said, it could have had a move to the upside, but it didn't. He didn't say what the markets wanted to hear, or however you want to phrase it. So sharp drawdown. So here's where we are. Under 4,000 for me is a much weaker level. Now, I will say this, the internal oscillators, the S&P McClellan, the NDX McClellan are at extremely oversold levels where they often rally from. So I've got on watch right now 4,000 on the S&P, and then
are they as extreme as they were in June, near the end of June?
The NDX oscillator is the most oversold it's been since March of 2020.
Wow.
So
without new lows in the market yet.
Yeah. So I'm trying to see if I've got, let's see if we can pull that up real quick. The NDX, and I don't want to take too much time.
What is this, McClellan's oscillator?
Yeah. The NDX McClellan oscillator. Okay. And it right now, okay, here we go. Let's see if we can find it. NASDAQ NDX. Okay, so if we take a look at where it is, we're going to change this to lines. So we'll make that a line. So where this is right now, negative 119.13. If you look at where it is on the chart right now,
yeah, nice.
It's below the June levels. It's below negative 119 to find negative 119.13. You need to go all the way back to February and March of 2020. So here's what I found about,
what I found where COVID was.
Exactly right. What I found about these oscillators is at the extremes, and I'd consider, sub 100 or plus 100. At the extremes, they're generally pretty good at calling market turns within, anywhere from 0 to 2 to 3 days. So in June, the oscillator bottomed about 2 days. So the oscillator was negative 99. It bottomed about 2 or 3 days before the market did. And then obviously we know what's happened since then. So I don't use the oscillators as a standalone buy signal, but you really have to pay attention when you see the most oversold since March of 2020. What I want to do here is just be on lookout if I see the signs of either a gap down and a reversal higher in QQQ, or just a gap up that holds and gets stronger through the day, then I at least want to be on the lookout for at least possibly a tactical trade. Could be a few weeks or longer. We'll see how it works out.
Okay, so that's interesting, and that's a pearl to anyone that follows McClellan oscillator.
And like I said, at the extremes, you know, and here's the thing, sentiment is very bearish right now. We all know, you know, what Powell said, but we're on triple Q. We're at exactly a 50% retracement, 268 to 334. We're right at 33 points off the low, 33 points off the high. So 300 is a very, very key technical level. There is some weak shorter term momentum. We're below the 50-day, the 20-day has started to turn down. All of my shorter term indicators are still negative, but that's often when you get the reversals, when the chart looks the worst. So I'm just on watch this morning, primarily in triple Q, to see if we can hold 300. If we start to move higher, as I said, I think there could be a tactical trade. September can be a very difficult month, as we all know by now.
Yeah.
But I think in this market, you really have to take it a day at a time and watch how things unfold, because seasonality told us that April should be a great month and April was a really bad month. So seasonality, you know, seasonality is, you know, we need to pay attention, but really nothing's more important than what's happening on the chart right now.
Okay. Any positions? So your narrative is you're leaning towards if you get a reason to get long, that's what you're looking to do.
I'm right now I'm 50% long and I'm 50% cash.
Okay. What are you long right now, Larry?
I'm long triple Q.
Okay.
I'm long Amazon, holding over the 50-day. I've got some energy exposure. I've got Chevron. So this is my next highest ranked sector. So the energy sector, tech and energy, is where I'm really focused on right now. And I think this pullback in XLE and these energy stocks like Exxon, Devon Energy, I think this pullback has been due. They've had about a 15-20% move off the lows. I think today you could get a 50% retracement. They're down about 2 or 3% pre-market. I do think that the pullback in the energy stocks is buyable. I just don't know if it's buyable today, 2 or 3 days. Once again, it's something that I want to pay attention to what the charts do. That the sector rotations here are super sharp.
You mean vicious rotation?
Vicious. And XLE has been trading. If you look at how these energy stocks have been trading most of the year, XLE and triple Q have really been on 2 different pages. You know, for the most part, they've been moving in opposite directions. So if we get any strength in triple Q, you could see more pullback in energy, maybe some more pullback in the commodity stocks. But I do think those pullbacks should be buyable in energy and commodities. The problem right now is bond yields are a problem. Bond yields over 3% is a problem.
All right. So I have a constructive view on TLT.
Okay.
I wanted to run that by you and see what you thought, because
okay.
You know, I last week I thought it was impressive how it rallied after Paul.
Right.
And the long end, it's more of the long end of the play, not the 10-year or lower.
Yeah,
but to me, it looks like it might be carving out a right shoulder here.
Very possible.
And if we get back above, you know, some of your moving averages, I was thinking 125 to 30.
Yeah, I think 120 breaks you out.
Okay. Yeah.
If you can get there.
Okay. All right. So that would give you like a 135 possible target if that's the range, you know, or 130, 130-ish, which was the breakdown. You think that would, so the debate is, does that happen, which didn't happen before because of flight to quality with risk off, or can bonds rally and that might be the catalyst for another wave up in the market?
You know, it could be. I'll tell you what, this is probably the toughest market that I've been in since 2008. So I started in 98, you know, 2000 to 02 was tough. 2008 was tough. The reason this market, I think, has been so difficult and choppy is you've got really two different major, when you talk about the bond market and stocks, you're talking about inflation and recession at the same time. And those two things are on opposite ends of the spectrum. So, you know, in this period right here, the markets and the media is only talking about recession. And then things start to move higher. Then we start talking about inflation. It creates these sharp rotations. I do think TLT, it's technically, I agree with you. Exactly what you said about the possible shoulder. It's, you know, it's just going to be choppy, I think, with everything else. But for TLT to work, the bond yields, the 10 and the 30, really need to come down, and the market really starts to embrace that slowdown story that's out there. And just right now, the 10-year yield isn't saying that. But if this starts to break below 3, then I like that TLT better, because you could be in the same, you could argue for a shoulder, a head, and then a shoulder here if this starts to break down, and call maybe 270, 280 the neckline.
Okay.
Bond market's the bond market's a tough market right now, because the Fed funds futures, it just ticked up to 3.75 to 4% is what the futures market is pricing in for the end of the year. So I think they're pricing in another 75 and then 250s. But it's so much news driven that if the CPI comes out in a few weeks and it's, you know, it's lower, then maybe you get that breakdown in bond yields. So it's just a lot. But from a technical perspective, I think you're right.
Yeah, you know, I can't remember a market either, Larry, where you almost have to, you can't feel comfortable that you're going to have a move for a 1 week consistently.
Yeah, it's you're right. You're right,
so
because
it's turning everyone into a swing trader.
It's, you know, it's just there's a lot of volatility. I've had to keep a lot more cash because you get these moves. So with triple Q, it showed a lot of constructive trend signs over the 50-day, over the 100-day, you know, stopped at the 200-day, which makes sense. But then, you know, when it lost the 20-day, I really thought on Thursday, because that NDX oscillator that we looked at, it was negative 95 or negative 99. So I thought that we had the possibility, just like S&P, to move higher, because triple Q tested higher. But then, you know, once Powell spoke, they put the brakes on everything. And, you know, these 10% moves, if you look at it, triple Q went plus 10% in what, 3 weeks?
Yeah.
It's come down plus, you know, negative 10%, just a lot of volatility. But for me, if triple Q can figure out a way to stay over 300, then I want to be on the lookout for, you know, a tactical, maybe a swing trade to the upside. But if it starts to trade below 300, and if the S&P stays below 4,000, then I think we just have to be much more careful.
Okay, maybe we could wrap it with Apple, because Apple's 7% of the market, right, Larry?
Yeah.
Okay,
yeah.
So, you know, we had that gap down last week, and then the rally into the gap that it didn't fill.
Right.
On, you know, Paul's Day.
Yep.
And now we're approaching a lot of major, we actually just filled a gap that it left on the way up.
Yep.
And we're approaching, you know, this pretty important area, mid 150s.
Exactly.
If the market's going to hold, I think Apple's got to dig in its heels above 150.
Yeah, I think you're right. 155, you know, 150, 152, 155. If we look at this move, 128 to 176, we'll call that 50 points. What is it? 48. So 151, 153. You've got the rising 50-day at 155.
Yeah.
You know, I use the moving averages a lot, you know, so I think you're right. You know, 150, 155 in that range. Ideally, you know, the NASDAQ futures are higher right now, but you know how this market is. They could be higher now and down 1% later, or vice versa. But really 150, 155. But I'll tell you, there are some tech stocks when we talk about, you know, because I know we've got, you know, people that are looking at tech stocks. If you were taking a look at the snowflake chart,
a
lot of relative strength. big breakout after earnings. Palo Alto Networks. There's some good tech charts that's holding over all the moving averages. Global Foundries in semiconductors, ON Semiconductor. Here's what I think in tech. I'm trading tech right now with QQQ. I do think that there's some very solid tech charts that are out there. CrowdStrike was higher pre-market, but that's over the 200-day. So there's a lot of tech charts that I think are setting up better than like Microsoft and some of the, NVIDIA, AMD. Those stocks could bounce if the market bounces, but I think that there's much better relative strength charts in technology. I like these fertilizer stocks, so I've got a position in Mosaic. We caught this entire move on the way up, coming over the 50-day. Big breakout, pulling back here. So we took some profits, but I think that Mosaic, these commodity stocks, they could pull back some more if tech pulls back.
All right, while you're there, I know what you're gonna say, but I have a request for your view on precious metal stocks.
Okay, you want to go with GDX?
They're making new lows. I don't know what someone's expecting you to say, but what do you say?
So, well, for my time frame, here's the thing. For my time frame, it doesn't work. But for a longer term time frame at $24 and change, you've got a ton of longer term support between, let's call it 20 to 24. So I think if somebody is very patient, or if they're a reversion type trader or anything like that, then from $24, you might not have a lot of downside. There's a lot of support that's in here. But once again, this has been coming down quite a bit, and I couldn't tell you why. I'm sure, you've got some followers that are really dialed in, but it just seems that no matter what happens with stocks and bonds, gold stocks keep going down.
Yeah.
If you look at that, but from a long-term perspective at $24, the reward, the potential reward to your risk is probably skewed to the upside, but it's just a reversion trade. There's nothing technically that would tell me to buy that right now, but it doesn't mean
not till we get a turn in the dollar.
For me, Dale, the way that I trade, I would at least want to see it get back over the 50-day.
Yeah.
So someone could say, well, why would I buy it at 27 when I could buy it at 24? But using just the 50-day as a filter would have kept you out from 37.
Yeah.
So the minimum thing I look for in these downtrends, just get me back over the 50-day, and then we can take a look at the chart.
Okay. To me, it sounds the groups that you like the most are techs and oils. And
I like oils longer term. I like techs possibly, tactical for the next few weeks. September can be a really tough month, so we'll see. But yeah, energy and commodities, I like the primary trend, and I think tech right now might be more of a tactical trade.
Okay, because a friend of mine I've known for 30 years has his own broker dealer. He always says to be careful in the market, that the last stage of it, the only two groups that go are techs and oils. So it just made me think of him when you were talking about your views. So maybe you could give us one quick look at Qualcomm. Tulin wants to know what you think of Qualcomm, and then I'll let you go pull your hair out.
Yeah. Now right now, Qualcomm is weaker. It's below all the moving averages. Now, I think it's going to do what QQQ does. So, what are we looking at? Maybe 10 or 15% over the recent lows. It's not a bad chart. It's not my favorite chart. I really just think, Dale, that you're going to get out of Qualcomm basically what you get out of QQQ. But I've got to tell you, I like this global foundries chart from a technical perspective. Yesterday, everything got blown out. The stock was up 3.5%. It's over the 200-day moving average. 50 days starting to turn up. It's got a lot of support in here. It's had a couple high volume upside days. So what I'm looking for in this type of a market is relative strength. What's not going down when everything else is going down?
Yeah, buy what's green when the board is red.
Yeah, because then I think if this stock doesn't go down when everything's down, what happens to it if everything turns back up?
Larry, like I said in that tweet, you're a very disciplined tactician, and appreciate you sharing it. And I think that everyone should follow you that's a stock trader, everyone, the whole cosmos.
Can I give a plug for the website? 30 seconds.
Yeah, of course you could.
Okay.
That's where I was going anyway.
Yes, sir. bluechipdaily.com is my website. We've got a 30-day free trial. There's no obligation whatsoever. And if you go to this page, it's the best ideas page. What you can do is you can just scroll down and you can look at some of the technical work that I've done and see some of these real-time posts. I put technical alerts on I've got a members only Twitter page. So I post technical alerts all day, every day. We post buy-side ideas. F.A.C.E was up 32%. I post sell-side ideas as far as locking in profit. So here's where I posted back in June. Exxon was right at the top. And I just put on, a take profits alert. So I put technical alerts out every single day, very similar to what you and I have talked about. And there's a free trial, so there's really no risk.
And a reasonable price after the trial. And you know what? Speaking of best ideas,
yes,
it was one of my better ideas to invite you to be interviewed on F.A.C.E.
Dale, thank you. You know what? You're a pro. When I talk to you and the questions that you ask me, I know that you're 100% dialed in, and I really appreciate that.
And thank you so much for today, Larry. And glad I can reach out in a pinch and have a pro like you come and edify the F.A.C.E community. Appreciate it, man.
Anytime, my friend. I'm just a tweet away or a email away.
This is Larry Tentarelli on Twitter at LMT978. And I didn't even write it down. I have it memorized, and really appreciate you today, Larry, and every time you're here. Good
Dale,
hunting. Good
you
hunting
too.
into, until we talk again.
You too, my friend.
All right. That's a wrap, everyone. You could join the team in 20 minutes on the Morning Edge. Remember, don't just count your pips or your coins or your shares. Count your blessings, everyone. You're welcome, everyone. Glad to add value. The whole team and I are glad to add value to your attempt at this very difficult endeavor. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.